Joe Biden vetoed the SAP 121 legislation, positioning him as an anti-crypto president. OPEC, the organization that controls and influences the global oil market, has approved an increase in oil production that could jeopardize the U.S. economy. The President of the United States, Joe Biden, vetoed the legislation designed to overturn the SEC's SAP 121. The SAP 121, a controversial accounting guideline issued by the SEC, requires financial institutions and companies that safeguard clients' digital assets to consolidate those assets on their balance sheets and provide specific disclosures. These strict accounting requirements make it prohibitively expensive and impractical for banks to offer large-scale cryptocurrency custody services. Regarding the veto, Biden stated that his administration would work with Congress on a comprehensive and balanced crypto regulatory framework, but vetoed this particular resolution to maintain the SEC's accounting authority. We have been informing you for weeks that Joe Biden was precisely working on this veto. He had already announced that this would be his intention, and this intention has just materialized. Undoubtedly, this is very negative news for the U.S. market regarding the crypto ecosystem. If U.S. legislation does not favor traditional banking, its foray into cryptocurrencies is somehow blocking access to the boost and development of crypto within the U.S. economy. This move is honestly somewhat risky and controversial, as this maneuver for the upcoming elections will not be well received by the crypto population. And let's also remember, as we announced weeks ago, that OPEC, the organization that controls and influences due to its market share in the global oil market, reached an agreement to extend the official cuts in crude production until 2025. However, the market's big surprise is that there is already a date for the dismantling of one of the voluntary cut agreements. This will occur sooner than expected. It will extend until September 2024, where we will then see a gradual dismantling until September 2025. With this phased elimination plan of the voluntary agreements, a date is set where the oil tap will begin to open, anticipating an injection of crude oil into the international market. The supply of this asset has a direct impact on its price, so expecting an increase in supply could also anticipate a downward impact on prices. We are closely monitoring oil because, as you know, expensive oil will significantly harm us inflation, a critical variable that the Fed considers to determine whether to raise, lower, or maintain interest rates. Therefore, we pay great attention to how the oil market develops, as remember, the S&P 500 and Nasdaq have a correlation with the crypto market. What this OPEC agreement tells us is that they will extend oil production cuts. Think that if we cut oil production, we are reducing supply, so the price skyrockets, but at the same time, OPEC has also said that these cuts will gradually decrease. However, in the short term, we see OPEC pushing hard to cut production while the United States is producing oil like crazy to control the supply and prevent oil prices from rising too much. Now, why isn't the United States friendlier with the countries that make up OPEC? If we analyze the S&P 500, a key indicator to understand the current state of the US economy, in summary and without going into too much detail for the immediate term, we are looking at an hourly chart. Here we see how they have worked the breakout of a Z, a wedge, very aggressively, and recently, after a small correction, they came to pierce the ZZ's guideline, and now it seems they are recovering it. This alone could make us think, in isolation, that we can be positive with the S&P 500. The truth is, we are in a scenario close to this idea gaining strength. But what makes us very cautious is the Nasdaq. The Nasdaq is the index of us tech stocks, and we have also seen something similar, a Z in the shape of a wedge that broke and went to shatter the Z's guideline. Now the price, as you can see, is coming to test the structure. While we see an S&P 500 that has recovered, we see a Nasdaq in the structure, which leads us to think that perhaps the S&P 500's disproportionate excursion is promoted to seek some liquidity before continuing with a bearish market. So here on the right, you see the S&P 500, as I was saying. It is possible that they are seeking some liquidity. Look at all this potential distribution. It is where the price, after breaking the structure, is making a false re-entry in search of liquidity to then continue. And this could be signaled by the Nasdaq respecting the structure very strictly. Honestly, we do not know what will happen if the price will want to respond and start a downward move, or if, on the other hand, it will be confirmed that the Z failed in its attempt to seek its macro bearish guideline, which would then invite us to think of a traditional macro Z that would push its price to look very favorably. We are at a key control point where we will soon be able to make crucial decisions again. Regarding Bitcoin, we must remember that we have been working on this macro defense zone that already created a structural trap, which we considered very important important to validate the structure and then take off. Ultimately, this takeoff belongs to this accumulation process that caused an impulse and is now being followed by this supply line. Remember that in previous videos, we were observing this supply line looking for a structural trap on the white line, the supply line to seek one of these levels identified with the volume profile. We saw that small trap to seek the zone, recover, and aim for an impulsive movement. So what are we seeing now? On one hand, a strong downward impulse that has its W and E, and now a Z might be forming. But what is more important is that we do not know if this Z has reached its end or not. It could continue, and we will consider this. However, even more important is identifying this defense zone. If you look, we have a trap here that seems very promising, but observe how the zone functions, and we find ourselves in the same situation now. The truth is that the entire crypto ecosystem has alerted us to the existence of this relevance. As you can see in Ethereum, we have a creek, a key level which they are holding for now. Here we have Solana that might be testing a very relevant structure that we have been following in previous videos. For instance, Cardano also warned us that we might be in a key zone, while Polkadot suggested we are in a hypothetical trap possibility. All this has led us to think that in Bitcoin, there is something not immediately apparent, but we have been able to identify it. Returning to the previous corrective pattern, the current Z is the point where it might end. It would be unusual, but it could happen. However, if the defense zone is lost, we might see a more aggressive Z, either to seek structures or even to be more explosive. To evaluate whether the Z ends now or continues, we will monitor the following. For Ethereum, we will pay close attention to the price level of $3,827, which could be its creek. Here we have analyzed the volume, and it seems that during these bearish attacks, absorption has been taking place, just as in this defense zone where we have seen the initiation of purchases. Therefore, it would frankly make sense that if the price broke through Ethereum's creek with strength, we could believe it. However, we are seeing that this approach to the creek with so many candles makes us a bit suspicious of the veracity of an immediate breakout attempt. So, it makes sense to expect some sort of pullback before trying for a true breakout in Ethereum. It is as simple as monitoring Ethereum's creek. If we break through it, we will be positive about the ecosystem, Ethereum, and of course Bitcoin, as we would be breaking through the defense zone, giving Bitcoin's price a lot of upward momentum. Essentially, Ethereum would be obliged to seek its institutional target, pointing us upwards. In that hypothetical case, Solana would be recovering this guideline. This would be considered a structural trap, inviting us to be positive, not only in Solana but also in altcoins. Not only in Solana but also in Cardano, breaking its creek. We will have to see this, but it is a way to monitor it. Similarly with Polkadot, if we end up breaking the creek aggressively and genuinely, we could end up being positive about its price. We must keep in mind that we might be looking at a Z that could have reached its end, but we will see if it can continue upward. The important thing here is not to put fences around the field and to follow key structures to anticipate what the price might do in the immediate future. And of course, with the Crypto Insight team live, we will evaluate how we can look for very detailed trading opportunities based on this analysis I just shared. Good luck with your trades, and see you next time.